Let me ask you something. Imagine I give you two people, both have the same salary, same CIBIL score, same documents, but you can only choose one person to give a loan. How would you decide? That one question is what created the entire world of alternate data. Because lenders realized something very simple. Documents only show your past, alternate data shows who you are today. And once that becomes clear, lending changed everything in the world. So let's keep this very simple. Alternate data is a new type of data that was never used in old school banking. It's not your CIBIL, not your salary slip, not your bank statement. It's the data that shows your real behavior. How you spend, how you pay online, how you live digitally, how stable is your life. Basically, alternate data answers the questions that documents can't. Like, are you financially disciplined? Are you predictable? Are you stable? Does your habit match your income? Are you reachable and traceable? This is why the world shifted from score-based lending to behavior-based lending. Alternate data made that shift possible. Let's talk about why this became a global movement. Reason number one, billions have no credit history. Across Africa, Southeast Asia, India, Eastern Europe, billions use smartphone but don't have a credit footprint. Traditional data simply cannot score them, alternate data can. Reason number two, our lives moved online. We pay online, we shop online, we work online, we run businesses online. Everything creates a tiny digital trace, and those traces tell a lot about real behavior. Reason number three, the old methods stopped working. People with perfect documents were still defaulting, and people with no documents were repaying loan perfectly. Banks needed a smarter way, alternate data became that way. Once countries realized this, they all started adopting alternate data in their own way. Let's look at how some of the regions actually use alternate data. Africa, platforms like M-Pesa started giving loans by simply looking at how people use their mobile wallets. No bureau, no documents, just real daily behavior. Millions got credit for the first time. China, they used online shopping patterns, bill payments, and social behavior. This helped them create some of the most accurate credit models in the world. USA and Europe, they looked at rent payments, utility payments, telecom records, and even subscription history. If someone pays rent and utilities on time for years, that's a very strong credit signal. And then India, with UPI, account aggregator, GST, and massive digital usage, India suddenly became one of the strongest alternate data countries in the world. This is exactly why you and I get instant loans today, because your behavior is visible through digital signals. Now that we understand the global shift, let's break down what alternate data really includes. Here's something important. Alternate data is not one single thing. It's an entire ecosystem with different layers. Each layer shows something different about a person. Let me walk you through these layers in a simple way. Layer 1, financial behavior. This is the heart of alternate data. It answers just one big question. How do you handle money? Your digital payments, your credit card usage, how you repay loan, your bank cash flow, your GSTR or ITR filing. These signals tell lender if someone is disciplined or chaotic, predictable or unpredictable, living paycheck to paycheck or maintaining a buffer. This is one of the strongest layers globally. But financial behavior alone does not complete the picture. So lenders look at the next layer. Layer number 2, identity and authenticity. This layer answers, is the person genuine and consistent? Things like PAN, Aadhaar match, driving license, passport, and business identity for companies. This is mainly to prevent fraud and ensure stability of identity. Every country uses some version of this, but even identity does not tell you about the income stability. So we look at the next layer. Layer 3, income and employment stability. This layer answers, does this person have a stable work, PF history, ESIC details? How long someone stays in one job, whether they own a small business. In lending, stability sometimes is more powerful than salary. And after income stability, we move on how compliant and responsible someone is. Layer number 4, legal and compliance signal. This layer answers, is the person responsible with rules and regulations? Company status, court cases, challans, TDS or tax compliance. This is not to judge someone, it is to understand risk. Now let's come to the layer that shows your everyday reliability. Layer number 5, daily life signals. This answers, does this person manage daily responsibilities well? Paying electricity bill, LPG connection stability, vehicle ownership, and finance history. People who pay everyday bill on time usually repay EMIs on time too. This is a strong behavioral pattern. Now let's talk about one of the most powerful layers today. Layer 6, Telecom and Digital Footprints. This is huge. It answers how active and authentic your digital world is. Your mobile number age, how often you port it, WhatsApp presence, digital presence on marketplaces, overall digital consistencies. Around the world, mobile number stability is one of the strongest trust indicators. And then there's your physical world stability. Layer number 7, location and mobility stability. This layer answers how stable is your living situation. Address history, delivery footprints, EPFO region, telecom circle, LPG address, vehicle registration address. People who stay stable in one place tend to have more predictable financial behavior. Now comes the part where everything comes together. How lenders use all these layers together. Here's the most important thing. Lenders never depend on one layer. They don't say, oh, this person changed the address twice, reject. That's not how it works. They combine hundreds of small signals to build a complete story. One signal alone means nothing, but patterns across many signals become extremely accurate. Example, stable mobile number, steady UPI payments, clean identity, stable job equals to low risk. Volatile bank balance, irregular tax filing, frequent number change equals to high risk. This multi-layer approach is why alternate data is far more accurate than just CIBIL and salary slip. And India is the perfect playground for this. So why does alternate data matter for India? India is a dream market for alternate data because we are fully digital, we use UPI daily, we shop and work online, millions have no credit history, MSMEs depend on digital payments, and our government data system is very strong. Alternate data makes lending faster, fairer, more inclusive, and more accurate. This is how someone with no CIBIL and no document can still get a loan, because behavior speaks louder than paperwork. Let me wrap this up. So when we talk about alternate data, it's not really about one API or one database. It's much bigger than that. It's a complete new way of understanding people, not through old documents, but through real behavior. Not through assumptions, but through actual patterns on how they live their life digitally. This is where lending is going. Smarter decision, faster approval, and a system that feels more fair and more human. Now, before we end, I wanted to share a small personal note. I've started the series to help aspiring product managers and anyone interested in fintech to understand how things actually work behind the scene. My goal is to break down complex concepts like digital lending, credit systems, underwriting, data, and payments, and explain them in simple and practical language. I'll also be bringing in people who work directly in fintech ecosystem so we can learn from real world experience and not just theory. So if this video helped you in any way, I genuinely appreciate your support. Subscribe to the channel. Drop a comment telling me what you'd like to learn next and share this with someone who's stepping into product of fintech. Your feedback truly helps me shape what I create next, and it means a lot. Thank you so much for spending your time here. See you in the next one.